Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Started with my low time frame bearish scenario where we still expect a move to the downside in either a WXY or an ABC, where the most common target area for Y and C are quite similar between 29.5k and 28.9k, which is also in nice confluence with this blue target box that we have over here for some additional confluence between 28.8k and 29.1k. And if price would move towards the downside and go below, then we have some rare targets for Y and C, as well as another target box over here, another support area between 27.8k and 28.2k. If we go to the bullish scenario, well, basically the three-wave corrective structure is finished and we are going to be looking for an impulsive structure to the upside. Now, this wave Y is very short in time compared to wave W as well as to wave X, and counting an impulsive structure over here is very difficult. But in the micro bullish scenario, you have to think something like this, right? Where this is then a 1, 2, 3, 4 and eventually a wave 5, looks very much or very close to an expanding diagonal, which is very, very rare. So that is definitely not preferred. Counting this as a 1, 2, 1, 2, and then another 1, 2 for then a bigger 3 leads to the same problem as usually with a triple 1, 2. You want to see a 1, 2, 1, 2, 1, 2 that is acting like a contracting diagonal. That is by far most common, but that is also not really the case over here. So the probabilities for a very bullish scenario and more upside are therefore lower, with then the micro bearish scenario being the more preferred scenario, where in the earlier videos today I shared this scenario where I mentioned in the probability section at the end of the video that the my preferred scenario was a move towards the upside to look for that double top at 31k, hit the 786, reach the little order block, and then move to the downside as I've drawn on the chart. And price moved towards the upside indeed very nicely on very high volume as well, grabbed the double top, hit the 786 also in the area of this little order block, which is amazing. And if we go to the 5-minute, then a potential trading setup that we've been talking about was a swing failure pattern move where a wick above the double top is required, but the candle is closing below the double top, and that is then your entry for a move towards the downside with the stop loss above. And in the swing failure pattern, you of course like to see continuation. However, what we have experienced recently is actually something like this, where if we quickly go to Discord, I want to show you this. Quite recently in this range, we had a double top over here, price wicked above, went down, back tested the horizontal, and then moved to the downside. In another scenario, quite recently, we had a double bottom, price wicking, moving up, coming back, back testing the line, and then moving to the upside. So the real question is, are we going to get this again, right? Are we going to get again a retracement to the upside, back test the 31.055 level on my chart before then a move to the downside? Of course, that is yet to be seen. But in this particular scenario, we were looking for that wave B, for then a wave C to the downside, where the most common target for wave C, where now the pull is from the high to the low of A to this high of B, is between the 1 and the 1.236 over here, which is between 29.4k and 28.9k, again in confluence with that support box that we have over here. Now on the lower time frames, we really saw a big push towards the upside on high volume. So of course there's going to be thoughts about, hey, might this be a wave 3, like an impulsive structure? This then as a 1, 2, 3, 4, 5, then you have a retracement and continuation. But the fact that we had such a big retracement or a big wick over here and then a retracement to the downside now indicates or gives probabilities more to a continuation to the downside. But of course we have to observe and wait for price to show his hand, but that is at least the more preferred scenario, where to the downside we also have a double bottom still, low number 1, low number 2, and it would be very attractive to take that double bottom. If we look at the CVD divergences, we had some bullish CVD divergences here at the lows when we were hitting the support area that we were looking for. And then when we hit the resistance area over here in the middle of the day between 30.6k and 30.7k, we saw a little bit of a rejection. However, while price was rejecting over here, we also saw bullish CVD divergences building for then a push towards the upside. And that is what happened. We pushed through this target box with one candle here on the 30-minute as well as on the 15, by the way, very violent to the upside, to look out for that double top. If I then go to the AGGR chart, then over here you can see that we had bullish CVD divergences at the lows, higher low on price, lower low on the blue CVD, which is a bullish CVD divergence. And then if I move to the 3-minute chart, and I zoom in over here, then you can see in blue we had higher lows on price over here, but blue was creating lower lows on the CVD, which is a bullish CVD divergence while at resistance, which can give an indication of resistance not holding. Now you might think at the moment like, yo, damn, we have big bullish CVD divergences over here, right? On the yellow line, we have a higher low on price, we have a lower low on the CVD. That is then a bullish CVD divergence where the target is going to be this high. However, it is known based on statistics that I have recorded in my past that there is a higher probability for CVD to be leading after a swing failure pattern move where you take liquidity and then move to the downside, meaning that price is then having a higher likelihood of following the CVD line to the downside. So I never really trust in this scenario bullish CVD divergences with price action on the right side over here. If I would be looking for bullish CVD divergences, what I would then be looking for is a move to the upside, right? A wave with structure, move to the upside, a retracement, and then new bullish CVD divergences, but not the divergences with any of the price action that we have on the left side of this wick, because there is statistically seen a higher probability of CVD being leading after a swing failure pattern. If we then finally end with the probabilities, then for me the probabilities on the low time frame as well as the micro are towards the downside. So on the low time frame, still be looking for a move to the downside and then a wave C over here, or a wave Y around the 29K area, or over here we have the 28K area. So 29 and 28 are actually very interesting. And also on the micro, the bearish scenario is very attractive, where then you want to see in this scenario a 5-wave move to the downside, right? And what is also interesting about going to these levels is the volume profile on the higher time frame. So if I quickly zoom out and show you this right now, then if price would manage to go below the value area high, which is this blue line over here, there is quite a high probability for price to go to the point of control sitting at 28K. So that is something to at least keep in mind. Of course, we have this support at 29K, but probabilities wise, the point of control is a very, very important support for price then continuing to the upside in the more medium time frame bullish scenario, where we're looking for this to be an A or 1, then a 2 or wave B, for then continuation to the upside in a wave 3 or a wave C. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.